Welcome to this Global Philanthropist Circle webinar on the purpose of capital. I'm Marika Spence, a director of the Global Philanthropist Circle, and I'll be introducing and closing out our webinar today. Today's featured guest is Jed Emerson, and our facilitator and dialogue guide will be Nili Gilbert. Before we begin, I'd like to just say a few words about our esteemed guest today and give a brief overview of Synergos and the GPC for those who aren't familiar with us. Jed Emerson is originator of the concepts of blended value and total portfolio management, with extensive experience leading, staffing, and advising funds, firms, social ventures, and foundations pursuing financial performance within social and environmental impact. In addition to his writing, Jed currently focuses on working with families exploring how to ensure a long-term legacy by managing their full net worth for impact. He also advises investment firms on the implications of an impact investing framework for their practice. Jed is an internationally recognized thought leader in impact investing, social entrepreneurship, and strategic philanthropy. He's really considered a bit of a guru in the space, and we're just so super excited to have him join us for this program, which is going to clearly connect with a lot of the values and approaches that Synergos uses. So really happy to have you here, Jed. Nili Gilbert is co-founder and portfolio manager of Matarin Capital, with responsibility for hedge fund and long-only equity strategies. Matarin has been recognized as a performance leader and as a thought leader, with its research cited in publications like the Wall Street Journal and Barron's. Nili also regularly appears on CNBC and Bloomberg television to share insights as well. Furthermore, Nili chairs the investment committees of the board of directors of both the Synergos Institute and the David Rockefeller Fund. She's been honored as a World Economic Forum Young Global Leader, as Entrepreneur of the Year by the National Association of Securities Professionals, by Bloomberg as one of the 20 ones to watch for 2019, and by 100 Women in Hedge Funds as a Chartered Alternative Investment Analyst Scholar. Nili, it's fantastic to have you here as well. So a warm welcome to you both, and we look forward to a stimulating discussion. A couple of quick notes about Synergos and the GPC. Synergos is a global nonprofit organization that brings people together to solve complex problems of poverty. Synergos has been around since 1986 and fosters trust and collaboration among businesses, government, civil society, and marginalized communities. The GPC is a community of leading philanthropic families and social investors using their time, influence, and resources to fight poverty and social injustice in their own countries and around the world. It was founded in 2001 by Peggy Delaney and her father, David Rockefeller. The GPC strives to increase a members' philanthropic impact and helps them become more effective social investors through peer learning, collaboration, and education from experts in the field like Nili and Jed. Before we dive into our discussion, just a couple of housekeeping items. Everybody will be muted by default and will be unmuted during the Q&A. If you can't hear me right now through your computer speakers or through your headphones, please dial in via phone. You'll find those instructions in your email that was sent by my colleague Lori Lannon, or mute and then unmute Zoom. If you have any issues, technical issues during the webinar, please just text or send a WhatsApp message to Lori, and use the chat function to submit questions and comments throughout the webinar. And we're going to make sure to get to those during the Q&A portion, so don't worry, we'll see them. Slides will also be emailed to you following the presentation. And with that, I'd like to turn it over to Nili, who will introduce herself in this conversation with Jed Emerson. Thanks so much.
But I really do have to pile on with some of the high compliments that have been given during your introduction, Jed. You've been such a prolific thinker in this space. You've published 8 books. Your concept of blended value is foundational in this space. I wanted to kick off by asking you, after all of your thinking, all of your work, and all of your writing, what was it that called you to publish this new book at this time?
Well, it's interesting that we're having this conversation today. It's my 60th birthday, and as I
Happy
was
birthday.
thank you. And as I was thinking about that, I was realizing that I have now spent 30 years of my life exploring how we think about capital as a vehicle to create change in the world. And That journey took me from venture philanthropy and working with George Roberts and the Roberts Enterprise Development Fund through working in the aughts with various public equities groups and private equities organizations. I actually ended up around 2009, 2010, working with a fund of hedge funds group, exploring how do you think about sustainability and sustainable hedge fund investing. And then, of course, was a part of the whole movement around impact investing. That's the most recent kind of iteration of this conversation. And I think that I kind of, I've been so focused. All of my other books have been about how do you do this? How do you execute strategies around social entrepreneurship and impact investing? And I kind of woke up a few years ago and realized that all of my conversations had devolved to issues of strategy and tactics and to definitions and metrics and, is this the better way to think about it? Is that the better way to think about it? And I just kind of woke up and realized that I kind of concluded that the reason that everybody is having such a hard time getting their heads around how to do this and what this means is in part because we've all kind of blown by the first question of why are we doing this? How do we understand the fundamental nature and purpose of capital? And I think in particular, how did we get to this place as humanity where we could think about economics as separate from social and environmental issues? And how did we come to this place where we think of ourselves as separate from the other? And I wanted to just stop, and I basically went off the road. I stopped giving talks. I think I gave 2 talks each year for 2 years. And instead, I wanted to just shut up and listen. And for me, that took the form of reading history and trying to understand how we have thought about this process over the centuries and what is it we know about how to think about this? And I think this is part of my frustration is I feel like a lot of people act as if these are new issues and these are new ideas. And yet I think fundamentally, in a lot of ways, this is a key aspect of the human experience is understanding purpose and meaning and how do we take material factors and drive kind of extra material value in the world. And so I wanted to just stop and reflect on that. And so the outcome of that is this book, which I should also say we're going to talk a lot about, but it's a free book. I'm not just sitting here shilling the book. You can get the ebook for free from the website, purposeofcapital.org. And I've priced the paperback and hardback at cost because I really feel like we need to shift our conversation and get back to first principles and reflections about what is it that we're really all trying to do here? And then we can talk about the best ways to get there.
I hope that we'll be able to talk quite a bit more about what I'm hearing and what you're saying, which is the element of the personal that's in our relationship to capital. As professional investors at Matarin, we think a lot about behavioral economics and behavioral finance. There's Nobel Prize winning research in this space now that talks so much about how we think and feel about money affects realities in our economy and in our markets. I wonder if you could share with us more about what you mean when you say in your writings that capital is a social construct.
Right. Well, I mean, it builds directly off what you're talking about in that exploration, because I think that we kind of forget that how we understand capital comes to us as kind of an inherited legacy of groups of people coming together, bringing their cultural and their intellectual assumptions to bear and reaching agreement on, this is capital. This is how it works. This is how it should be measured. This is how it should be allocated. This is our responsibility as we think about how to manage capital. And I think we forget that this is all just a construct. This is not, it's not like God handed this down to Alan Greenspan's calculator and this is the rule, right? We basically are operating within a set of assumptions that, quite frankly, a group of white academics from the Chicago school have basically sold to the world, and those economic assumptions were then taken by Wall Street and framed into a set of operating principles and practices, and we all operate in accordance to those assumptions. And so I think that, especially when we talk about how each of us personally approach this conversation, I believe we are each in a place where we can define the market. We are the market. And especially when you think about ultra high net worth families, the purpose, the way that we think about wealth often is one that has more to do with wealth retention and kind of how do we manage wealth in a way that is in alignment with our family's interests and values and beliefs. And it's less about how do we make more money. And yet so much of the conversation about the purpose of capital assumes that the purpose of capital is to seek its highest and best use, by which we mean to make as much more capital as possible. And then everything else is a subset of that discussion. And so if we begin to talk about things like social impact or impact investing or broader value propositions that we want to advance through our deployment of capital, we start from this place of saying, well, how much do you have to give up? What does that cost you to do good? We operate within this construct that's bifurcated, that basically asks us to believe that the nature of the value that we create over the course of our lives is an either-or value proposition, that you're either going to have to do well or do good. You either work for a nonprofit or a for-profit. You make a grant or you make an investment. And in truth, I would argue, as you know, that value is fundamentally whole and non-divisible. And what we need to do is first think about what is the nature of the value that we want to advance in our lives and in the world. And how then do we create a set of instruments and tools and strategies that are best positioned to create and capture that value that we seek? And I would argue that for most of us, the measure of value and worth is not a bigger pile of cash when we're dead that's going to end up choking the children and the generations that come after us. The legacy that most of us, I would argue, want to leave is one of integrity, of values, principles, beliefs about how we are in the world and what it is that we're called to do, be, and become in the world. And that if we start by reflecting on and exploring some of those ideas, then when it comes to reflecting on what do we do with our money, it's a much easier conversation because you're focused on the fundamental purpose of what it is you're trying to do with your money. So it shifts the whole dialogue that we have about the purpose of wealth and capital.
So when you think about the relationship between ourselves and our capital, or the way that we engage with capital, do you see most of the potential in changing the relationship between the owners of capital and the capital itself, or a personal reflection about the owners of capital and their intent and purpose in the world?
I think it's tricky because we each play different roles as we come into this discussion. And so some of us identify first as inheritors. Some identify first as fiduciaries of capital. Let's say whether it's a foundation or a pension fund or these type of things. And I think that we, again, this goes to this question of separation of self, because we somehow think that who we are from Monday to Friday is different from who we should be on Saturday and Sunday. And some of this shift in perspective and some of this energy that's coming around wanting to explore how do we manage and deploy capital differently, really I think is a function of the fact that in the past decades we've had more and more wealth that is controlled by the people who created that wealth. And whereas in the 50s, 60s, and into the 70s, you had a lot of capital that was institutional capital. Maybe it was created generations before, but when you have folks who really are owning their wealth, if you will, it shifts the conversation. And we'll see, again, as we have more and more millennials come into positions of fiduciary duty and responsibility. And as that shift takes place, bring a whole new set of operating assumptions to that conversation and say, in fact, the idea that you could pursue profit in the absence of purpose makes no sense. And more, young people are saying the idea that I would spend 30 years of my life just trying to make money in order to go do something that has meaning, it doesn't make sense. And as we get more and more women who begin to take control of greater amounts of capital and bring a whole nother, for lack of a better word, I don't want to generalize, but bring a whole nother gender perspective to what it means to be wealth holders and fiduciaries, all of this will begin to change in very significant ways. And it's a way that I think we're all trapped by the current definition of wealth and capital and understanding of what it means to be a responsible fiduciary of capital. The advisor community is trapped because they're expected to only talk and ask about certain things. The wealth holder community is trapped because you begin to be viewed as your money as opposed to who you are. And this conversation of meaning and purpose is an opportunity to blow that all open and to liberate all of us from a very bifurcated and, I would argue, not very effective set of assumptions around the meaning and purpose of wealth and capital.
I want to come back to the notion of the topic of capital as a social construct, and then dig a little bit more into the idea of the personal, the self, and the other, as it's reflected in our current constructs about capital. Coming back to the notion of capital as a social construct, and especially when you talk about the role of the younger generation in this whole framework, the idea that each of us may have the chance to define our own relationship or way of engaging with capital takes me to some of the modern technologies that are being developed in this space. Things like cryptocurrency, where we get to define and tie value to different types of assets or goods, tangible or intangible, or potlatch or M-Pesa. I wonder if you see some mirrors between the work that you're doing on the purpose of capital and some of the technological revolution about how we're actually storing value in society in the modern era.
I think it's a really great area to reflect on. When we think about cryptocurrencies, obviously a lot of that is built on the foundation of the technology of blockchain. And I won't pretend to understand anything about blockchain. I've read all kinds of stuff and I'm still kind of like, okay, how does that work? But with that foundational innovation, it allows multiple stakeholders to engage in explorations around how to understand the transaction, how to value the transaction, and to bring, again, a very strong social, and I mean social in the sense of cultural lens to defining what that means. The other part to that kind of innovation is that it calls into question some of the other assumptions that we've had about what money and currency and capital should look like in this exchange economy. And so that is also an opportunity to bring a more critical eye to the way we understand capital. Justin Fox wrote a great book called The Myth of the Rational Market that explores the evolution of our understanding of how capital works. And it's a really great read. I enjoyed it a lot. And so you've got this new insights and innovations about how we could be managing things. We have critiques of the existing kind of practice. And then you start to think, well, wait a minute, this whole cultural context that we operate within is really built upon centuries and centuries and centuries of all kinds of different understandings of how we should use capital. So you mentioned the potlatch practice and the whole notion of gift economy in many indigenous communities and cultures around the world. There are so many different ways that we can think about this, and it opens up a whole nother conversation for us. And this is why, again, I think it's so important that we go back and we refamiliarize ourselves with history. Because honestly, I think of myself as a fairly well-read person, and I stay up to speed with most of the kind of current discussion topics and the best books and all that. The more I read, the more I understood how little I actually knew about much of anything. And the more important it became to me to not talk about solutions and innovations and answers for going forward until I felt that I was more fully grounded in this kind of flow of human history and experience and wisdom, grappling with exactly these sets of issues and challenges that we face today. And I think what I tried to do in the book is point people toward that. And the way the book is structured, as you know, is I have a lot of excerpts from a lot of different, references for historians and philosophers and spiritualists and a whole set of things. And what I try to do is offer kind of my linking narrative to those perspectives and insights so that we can all kind of look at our current context with a greater sense of perspective. And I think it's just really important that we pause to do that, because we have fallen into this place where we operate from a posture of positions. I have a solution, a strategy, a fund, an investment instrument, and it's better than yours because of this, this, and this. And you should invest this way because this, and instead I think we need to pause from all of this pitching that we do with each other in a variety of different settings, and instead look to be more in conversation and dialogue the way we're doing today, because I'm gonna bet that the better possibilities and solutions will come out of our kind of mutual conversations with each other as we explore perspectives and find that space in between self and other in order to create something that's truly innovative and new, and again, grounded in these first principles of purpose.
It's perfect that you just brought up again these concepts of mutuality and dialogue, because it comes back to this discussion of the personal in capital that I hope we can dig into a little bit more. As you know, Synergos Global Philanthropist Circle has an affinity group that we call Spiritual Civilization. It's actually the largest affinity group in our community. The impact investing community is also very large. Right. And then in Synergos programs around the world, there's a pillar that we call Inner Work for Social Change that talks about the importance of who we are personally when we bring ourselves to our work. And these concepts remind me of the ideas that you put forward in your book and your work about the idea of mutual impact, as you call it, and also the concept of reframing our notion of ourselves to be more inclusive of the other. So I was hoping that you would be willing to tell us more about this.
Sure. I think it's a reflection of our sense of operating within this illusion of separation that prevents us from really capturing the full value of the capital that we have available to us to deploy. When we talk about investing, the first thing we talk about after investing is returns. And what are the returns that you need? How much do you have to make? How much is enough? And I think that we've gone astray in the sense that if we pause and step back and understand that our interests are our collective interests, that myself, if I can expand the boundary of myself to be inclusive of the other, to be inclusive of community, to be inclusive of ecosystems, then it's not a question of me having to give up returns. It's a question of me understanding value in a broader frame. And when I speak about, in the book, I have a chapter called On Impact, From Ignorant to Mutual. And I think that we need to understand that all of our capital, all of our activities have impact in the world. And the first thing we need to recognize is that we are completely unaware of the vast majority of impact that we create around the planet, in our lives, in our relationships with others. And that we need to really start, quite frankly, from a place of genuine humility about that ignorance and opening ourselves up to the possibility that we don't know. We can have all these fancy frameworks and metrics and multipliers and all this stuff that we want to use to convince ourselves that we understand the nature of the impact that we're creating. And at the end of the day, we still don't know. And so we have to enter the conversation from there. And then I think we can talk about broad impact in the sense of public securities and policy initiatives and things that are distributed impact, which is not bad impact. It's just broad, and it can be kind of thinner, if you will, because it's resources and assets and energy that is really diffused across a much broader arena. A deep impact is the type of impact that you get when you invest in a community, when you invest in an organization, when you invest directly in a company, and you really are more fully engaged and connected with that investment and more deeply kind of a part of the process of what those actors are advancing in terms of outcomes. But the key part that you're speaking to at the end is what I call mutual impact. And I think the corollary in the nonprofit sector is, we used to say when I was running a nonprofit that volunteers get a lot more out of volunteering than the people they're volunteering for. That in fact, that experience of being present, of being in a place with others, almost forces you to open up and think differently about the other that is before you, but also about yourself and who you are and how you want to be in the world. And it opens a possibility that if we think differently about the nature and purpose of capital, we can become as transformed in the process of deploying capital to create blended value, in my language, as the people that we're concerned about. And that impact investing and the creation of impact is not something we do to others. It's something we create in collaboration and partnership with others and in community. And when we have that mindset, it opens up a really different way for us to explore what is the nature of the value we want to create, and what do I really need? What do I need in this partnership and this collaboration? And it really opens up at a social level the possibility of what's called restorative justice, of where in the act of reconnecting to create greater justice in the world, we create greater justice and fulfillment for ourselves as a part of that process. And if you think about, for example, the Truth and Reconciliation Committees that operated in South Africa, it was a process not of blame, but of exploration, communication, and kind of mutuality, of really trying to get back to community and heal from that legacy of real pain and oppression. And when we think about capital, it is so often used unintentionally as a vehicle to destroy. And we like to think about how great money and wealth is, and we talk about job creation, and we talk about the economy growing and all of this. But in fact, if you really look at the history of capital, it's a question of extraction. It's a question of concentrating more and more wealth to fewer people over the centuries. And what we're really called to account for is whether that really is what we should be doing with our wealth and the purpose of that capital. And again, it's framed in this idea that whoever kind of dies with the most toys wins, when in fact, what we're really looking for is whoever dies with the greatest kind of fulfillment and sense of creation wins. And in that sense, we should all be winners at the end of the day.
It really strikes me that another basic tenet of classical economics is scarcity. When you think about capital in a limited sense, and it's a scarce asset, then at the end of the day, it's a resource that we're fighting for, and it's a zero-sum game. But if we expand our ideas of value, then the zero-sum game may go away. Right. I guess, so I have to admit to you, I'm an incorrigible frameworks person, so I'm your greatest student on this one. When I think about how you talk about the expansion of our idea of value, For example, to expand from the notion of the self to include the other and mutuality, perhaps also expanding from ourselves to include the planet and the other organisms on it. The potential for personal transformation that can come in the ways that we allocate our capital. I have to wonder whether this is just, or not just, but whether this is in fact an elevated notion of the earlier concepts of blended value that you brought us, but it's blending in many, many more things. But on the other hand, the reason I pause is because I wonder if that's trying to take this expanded idea and just bring it back into a framework mindset.
Wow, it's really interesting. So as I was just involved in this retreat with a group of folks who were grappling with just these issues, and we got into this conversation about the Western notion of being on track versus being off track. And some people were saying, well, wait a minute, we had said we were going to approach this discussion this way, and this way, but it's going that way, and so we're off track. And then a group of other people said, well, no, wait a minute. Actually, from my cultural perspective, being off track is how we problem solve. This is how we work, right? And it's not a linear process. And so I think it's very funny. I think, so the blended value construct I kind of came to out of the process of working with entrepreneurs and asset owners who were trying to advance kind of an integrated approach to value creation. And that's when I started realizing, this whole thing is just from a business perspective. You talk about, what's the value proposition? And our value proposition is bifurcated. And so therefore we need to think this other way. And I thought it was pretty good in terms of the context and the people and what we were talking about at that time. And now I'm just incredibly embarrassed at some level because all I was talking about was kind of Eastern philosophical understandings of wholeness and totality and connection in response to the traditional kind of dominant Western and American financial capitalist frame that we tend to operate within. And so it's just interesting because that idea, I think, is sound, and it's grounded in the experience, the practice of what you're describing, and yet it's also housed within this much broader reality of whether you want to call it a spiritual mindset, a mindfulness approach, a holistic ecosystems approach. I mean, all of these things are all talking about the same sets of issues. But I want to turn it back to you, though, because you're in a position where you're living the bifurcation, if you will. People give you capital to invest, and I know that your firm and your practices are moving toward more integrated, approaches to understanding how you do this. But so how do you experience this in the role that you play in these capital markets with your firm?
We find ourselves really trying to figure out how to update the frameworks to create new kinds of models that better reflect the economic and global social realities that we all see, which is why I asked you whether what is the limit of updating our frameworks versus something that I think that you call for more directly in this work, which is letting go of the idea of frameworks entirely, doing other kinds of work, and then coming back to the task.
Wow.
And so it's, as I said, in some ways, I'm one of your greatest students as a practitioner who's really working on trying to model all of this out.
Right. No, but I think this is really key because this is the challenge of the mainstreaming of impact investing, if you will.
Yes.
I think that the problem we have is this idea that companies that aren't reflecting on these questions will never really challenge the fundamental business model that they operate within. And if they don't do that, I don't believe that any product or service that they put forward will be one that does in fact advance this deeper mutual impact angle and perspective that we're talking about here. I think it's fine if folks want to invest in strategies and products that offer broad, diffused impact, and that's okay. That's the nature of some of those securities, but we shouldn't delude ourselves. We shouldn't think that somehow that's the same thing as creating kind of deep, sustained community level impact or much less mutual impact. And this is the danger of people taking the SDGs and saying, well, SDG number whatever is about water, and this is a water product, so that's got to be good. So we're an impact investor. And so I think that I understand, how people can come to that, and I think it's really up to the asset owners to really challenge and push and clarify, because without the transparency about what this really is, we will continue to grow this industry. We'll go from today we have, 12, 13 trillion dollars that's being managed on some basis of SRI impact or ESG integration. And we're going to go up to 20 or 30, and the world is still going to be in trouble. We're going to continue to contribute to the eco side of the planet. We will continue to see people have higher wage growth, but no equity. And no real investment in the system itself. And the system itself will be fundamentally still structured on the basis of how much value can you extract as opposed to how much value can you create through your capital, through your presence in the world, through being present with the other in that process. And those are the issues that we need to stay focused on, because the rest is just kind of rearranging, the chairs on the Titanic. And talking to ourselves as if we're creating impact, convincing ourselves that we are good and we are the righteous, when in fact that may be far from the case.
What you're saying right now is such a great dovetail into one of the last two questions I wanted to ask you before we open it up for questions from the participants on the webinar. So this is your warning, everyone. Get ready with all your hottest questions for Jed. So when you talk about, for example, the SDGs, at Matarin we look at the SDG financing gap, which is estimated by the World Bank to be over $7 trillion per year between now and 2030. So if you talk about 12 to 13 trillion invested in SRIs, sustainable impact invested by any definition, now thinking about needing to add 7 trillion per year, every year between now and 2030. So we think about at that point that we really need to look at the continuum of capital that's being put to work behind these causes, and it may be that very deep impact investments, purely philanthropic capital just simply won't be enough to move the needle, which is why we think about doing the work of trying to put forward frameworks that can also bring along the traditional asset classes. And so the question that I wanted to ask you is, how do you see beyond impact investments, which is the main subject that you write about in this work, how do you see the continuum of capital from the deepest philanthropic capital all the way up to simple public market investments fitting into this broader framework and call for change?
Well, again, when I talk about impact investing, I'm really talking about the impact that capital has across a portfolio, across the continuum that you outlined. I'm not really speaking simply to direct investing that draws the shortest line possible between my money and street level impact. I think that we can think of impact investing as either a lens or a sleeve. And and so we need to be clear about that. And when I'm describing it, that's the framework that I have. And so, and that's why I operate within the total portfolio management framework that does exactly what you said. When I sit down with folks, what we talk about is what are all the assets that you have at your disposal, and philanthropic, near market rate, and then what are the other less tangible human assets that you want to bring to bear, And how do you integrate these toward capturing, again, that deeper value and purpose that you want your life to be about? And then you can step back and say, all right, well, here's the mix of strategies. Because when you go across that continuum, exactly as you said, different asset classes offer different risk, return, and impact profiles. And so for me to invest in public securities and expect a microfinance bond note impact doesn't make any sense. And so this is where I get frustrated with some of the discussion in the public sphere about, you know, what this whole conversation is about, because you have these people who clearly are talking past each other, and yet they both think they're talking about impact investing. I'm reminded of a Saturday Night Live skit with Dan Aykroyd. Remember they used to do those little commercial bits in between the skits? And he came out with this can, and he sprayed it on top, and he said, "This is a floor wax," right? And then he turns around and he goes, "Well, actually, it's a dessert topping, and you can do it both." You know, that's kind of how I think about this. It's a floor wax and a dessert topping, and you have to know, like, what are you serving? Well, that's the idea. I have no idea what we started talking about, but I liked where we ended up.
That's great. I'm not going to say that my mouth is watering, but I like where you're going with this. So one last question for you before we open up to our members. You were, you know, as we said at the beginning, in many ways an original thinker in this space. And now you're bringing the space forward with these new ideas and concepts. If you had to imagine where you'd like to see the world of impact investing from a total portfolio management perspective 20 years from now, can you share with us what that vision may be?
Well, first off, thank you very much for the compliments, and I appreciate it a lot. I will say that Chairman Mao said that a leader is somebody who finds a parade and goes and stands in front of it. And I think, you know, in some ways, that's kind of what I've done accidentally. And, you know, and I'm proud of the contributions I've made, but I'm also very clear that this is really a tradition, a set of practices, ways of thinking that have been with us really for centuries. And there's so many people in our recent generations who've really made all this happen that I'm really, you know, proud to be a part of this community of actors who are exploring all of this. I think as we look to the future, we are seeing, I think, an inevitability of these issues being brought to the fore in the way that we've been exploring for the last hour. I think that there is a hunger on the part of so many of us to be more fully present in the context of what is happening in the world today, and a recognition that we are at significant risk. Environmentally, certainly, and we can see that in a certain way in terms of metrics and the scientific reports and everything that we see around us in terms of what happened in Alabama just the other day. But I think we also need to recognize that there is when we operate around economics as extraction, there's a process of human depletion that takes place at the same time, and that we are coming to a place where many of us are feeling void, we're feeling challenged, we're feeling empty as we look at what we've actually done and achieved with regard to the money that we've been managing and moving forward. And so I think what we will see more and more of is exactly these types of conversations, because it is out of this process of dialogue and discussion, it's out of the types of possibilities that Synergos makes possible for its members to come together, to be in community, to go deep and go far. That really is what I think so many people are really craving and looking for. And I've been impressed over the last year to see the number of new initiatives that are being organized by asset owners and those who work with them to go in a different direction. And I think of groups like Jubilee out of the Bay Area, which was launched by a group of folks, some of whom came out of the RSF community, some of whom came out of Oakland and the community development efforts there, and some of whom came out of the Buddhist community. So you have this really interesting kind of intersection of ideas and possibilities and prospects. And you've got just more and more people who, from a wealth management perspective, are saying, I want to be engaged in experiential wealth management. I want to be engaged in a process where I'm not simply managing my money, I'm managing my life and process, and I don't want to be managed as a client. I want to be managed as a person who is coming to the table not simply with wealth, but with the opportunity and vision and possibility to have it be so much more than just money. And I think that's just going to grow. And if we stay clear on the institutional implications of that and the fact that there is a possibility of what I call cheap impact, of people in essence presenting themselves as pursuing strategies that have deep impact when they really don't. And we need to call ourselves accountable as a community for what it is we're really trying to do and be about. And I think our possibilities are really endless if we continue to move in that direction, which I think will happen as we get the shifts in fiduciary membership, as women and millennials take ownership of capital at greater levels in the next 20 to 30 years, and as we continue to see the incredibly negative effect of extractive financial capitalism as opposed to other forms and ways that we could envision and execute our approach to capital and wealth management.
Thanks so much, Jed.
Thank
So
you.
now we'll open it up for questions from the members.
Yeah, and actually, thank you both so much. Really fascinating conversation. And we do have a couple of great questions. But before we even get there, I just wanted to acknowledge that we also have Synergos founder and chair Peggy Delaney in the room. And I sort of wanted to give her the first right of the prerogative to ask a question if she has one. So Peggy, just flag to us if you've got one.
Well, I would like to hear Peggy just reflect on some of this conversation, because your perspective is phenomenal on this over years. So I'm very curious to hear your thoughts as you hear us kind of talk about this.
Well, thank you, Jed, and great to hear you talk. It's been quite a while since I've heard you, and I haven't yet gotten to read your book. For me, it's been very instructive, the dialogue between the two of you, in terms of how we at Synergos begin to try to shape our investing affinity group. Because we have people, as you know, from all over the world, from many different countries, coming at it from quite a few different perspectives. And as both of you have been saying, the field is shifting all the time. And there's so many people in it from one perspective or another. And so the question that keeps arising in my mind, when you've got a group of leaders, a lot of them are leaders from the business sector, but also from the philanthropic sector, who really want to make a difference and are willing to risk at least part of their portfolio to do that. But because it's a diverse group, what is the niche that we should be filling in this very broad and diverse field? So that was the thinking that was going through my mind, not any wisdom to shed, but more questions that's brought up for.
Well, that's good. I mean, one of the things I really say in the book is that we have to sit more deeply with the questions in order to create the right answers. So I appreciate the fact you're leading with the questions. But having said that, I mean, I really think that part of the value of Synergos and similar kind of networks is that it creates a space where people can step back and not have to lead with their answers, that you can provide opportunities, and I think you've done this over the years, for people to come together in safe spaces. I mean, I hate to, that's kind of a loaded term, but I mean, in a place where you can really say, this is everything that I'm bringing to this experience. And it's not simply a conversation about how much I have to give up to do good and well. It's a conversation about how we even understand what it means to be good, if you will. And I think that there are very few places in the traditional society where we can have those conversations, because so many of those areas, we come in our role. We come in the role as advisor, we come in the role of wealth manager, we come in the role of academic. I mean, God forbid you're a thought leader and you're not like incredibly inspiring and insightful. It's kind of, you can't come in from a place of humility in the same way you can when you're in a part of a community where you can enter from a place that says, I'm here to be a part of a journey. I'm not here to sell you anything, you know, whether it's my thought or my solution or my strategy. And it's really, and again, this sounds naive, but I think that the part for me over the past 3 years of doing this reading, research, and reflection that's been most liberating is I think we all kind of feel this weight. We feel that it's up to us. We have to come up with the solution. We have to create these changes. The time is now. It's critical. What are you doing? And instead of kind of saying, you know, we're all a part of this massive flow of human history and humanity's experience and inquiry and journey. And all I have to do is my part. And that can look any number of ways depending on where I am in my process and on my path. And it's all good, you know? I mean, at the end of the day, you know, the earth, Mother Nature, Gaia, is gonna just shake us off like a bad cold. We are the ones who really are at risk. And we have an opportunity to approach this from a place of humility and inquiry and collaboration that I think can be just phenomenally powerful for us as individuals and us as individuals in community. And I think that's what I'm just trying to say in the book. It's like, gosh, you know, let's not skate on the surface because we are skating to the cliff, and let's just redirect, go deep, and go far that way as a community. And I think that Synergos and other organizations that are bringing people together in these ways are just phenomenal vehicles for that, and a real blessing for the field to give people that space to explore.
Thank you.
Jed, to get to some of our participant questions, and thank you so much for that. Robert Bogard, and you may be able to see them on your screen as well. Robert Bogard from Amsterdam. Jed, it sounds like you're saying get a clear why before acting, but the why is a continuous journey, which is also discovered by acting, reflecting, and learning. So can you expand on this?
I think that what we're talking about fundamentally is a process of praxis, where action creates new insight and knowledge and perspective that then gets deployed in new solutions and new ideas. And the piece that I'm really wanting to call out is that as we sit with what we think are effective answers and solutions for where we are at this point in time, we have to simultaneously totally keep in mind the fact that that idea is situationally grounded and relevant and will not be the same answer or idea that we will have in 2, 3, 5, 10 years. And that we need to understand that this is just as we are each in this process of both being and becoming, the strategies and practices and solutions that we're promoting are also in this iterative process of change and dynamic kind of evolution. And what scares me is when I go to conferences and I hear people who seem so convinced of the righteousness of their perspective and their strategy. And when I sit on finance committees and I hear managers come in and talk about what they're doing as the answer, like the killer app for poverty. And all I'm saying is that as we engage in this process of action, we keep a sense of perspective about what we actually know and don't know, and what we need to really be open to discovering as we go forward in this process. And so I think he's exactly right, that what we're talking about is this process of push, pull, shove, and evolution that takes us into new places. And we can't get there if what we think of our own ideas and our own practices is the be-all and end-all. Because I guarantee you, there's somebody else in the room who comes at it from a different cultural or experiential perspective who actually thinks their idea and way to think about it is the way to go. And so this is why I go back to this idea that we need to be in dialogue and discussion and exploration as we each kind of are on our path doing what we feel called to do and operating within the context that we feel is kind of most relevant for who we are and what we're trying to create. And we find others who will be on a similar path, but none of these paths is the only path that we're called to advance upon.
Thanks, Jed. Jen Werbitsky is asking, what sort of values-oriented questions might you recommend asking a board of directors or a management team to spur those deeper conversations on this topic? How do you recommend helping to guide others to a more expansive way of thinking about capital and ownership?
Well, I think there's a couple of things. One is Well, first off, I should say in the book and at this point in my life, I'm really trying not to be directive around a lot of this because I really want us to sit with these fundamental questions before we then say, how do I take this and convert that to an effective retreat for my board or something like that? And I think that in some ways, I want to raise the bar on all of us to come to those conversations better prepared to frame and engage in those questions, as opposed to focusing so much on, how do we actually execute and do this today? Now, having said that, I released the book in late September, and we've distributed, thousands of copies of the ebook for free online. And one of the pushbacks I'm getting from people is that this is a very elitist way to go about it, because you have to really have the time and focus and possibility to sit down with some of this. And even reading the book, this is not, it's not a book that you can flip through and get the 5 points to purpose, right? My favorite compliment I received was from Chuck Leaf, who's the head of Naropa University. And he said what he really likes about it is that it's a book for grownups. Like, you have to read the book and you have to think about it and you have to think about what it means. The problem is that a lot of people, just the nature of our lives in the world today, we need on-ramps. We need other ways to engage in this process. And so part of what I'm moving toward now over the next few months is exactly this question. How do you come up with a way to frame this dialogue for boards of directors and individuals on terms that they don't have to come to the table with a PhD in philosophy and the history of finance, And that's really, I think, an opportunity that I'm looking forward to exploring more. And I don't have a pat answer for how this should look as we try to explore these things. I'm actually looking forward to practicing what I preach and be engaged with a variety of different communities in exploring, kind of like for our community, what's the best way to go about opening up this conversation. And so that will be something that I'll be a part of over the next year with a variety of different networks and organizations. I'm just going to explore and see, in fact, what the best answer is to your question, because I think the answer will be different for different groups with different histories, with different agendas. And we need to figure out, how do you have this conversation in the context of different realities, if you will, that are kind of driving how we represent as we come to our board meeting, as we come to the fiduciary conversation, as we come to a retreat.
Jed, thank you so much. Thanks. What an illuminating hour this has been. Such a fascinating, yeah. So I'm so glad that, Jen, that you asked that question. And I just wanted, since we're at the top of the hour, I just wanted to say a huge thanks, a warm thanks to Nili and to Jed for sort of walking through this conversation with us, for thinking expansively. Huge thanks also to Lori Lan and our team, who's sitting here and has deftly managed the technical aspects of this and knows a little bit about impact investing herself. And I just wanted to say that, that this sort of conversation came about, I think maybe because I called you, Jed, and you picked up the phone. And I just want to say thank you for picking up the phone. And I hope that, and that's just a wonderful quality that you have of being so open to engaging with others in this space. Please, if you, as you're thinking of thought partners for this next stage in what you're doing, call us and we will pick up the phone. Absolutely. So thank you all so much. And thanks to everybody all over the world with the Synergos GPC for participating today.
And thanks so much to you too, Marika.
Yeah,
Thank you very much.
Have a great day, everyone.
Take care.
And see you in Hong Kong, Jed.
You bet. Exactly. Talk to you soon. Bye-bye.
Bye.
Bye.